I'm Uttej Mannava,
And I'm Shivam Suri.
and we're from Youth Culture Incorporated. Youth culture bridges the gap between youth and industry, and today we're thrilled to be here with Duane Francis, a portfolio manager and financial advisor at Mandeville Private Client. Welcome, Duane.
Thanks for having me.
Yeah, thank you for being here. Before we start, can you tell us a little bit about yourself?
Absolutely. So born and raised in Halifax. My parents are from Trinidad and Tobago. I studied at the University of Western Ontario in London, studied economics, and I've always had a passion for finance, for money, which is a good thing. But moved to Ottawa in 1995, and I've been here since that time, building a wealth management practice. I have married for 25 years this year, 3 boys. Actually, one of them's third year university, so similar to your ages, and one's in grade 12 as well. And my youngest is 15 and going into grade 10. So happy to be here. Thanks for having me, and looking forward to this conversation.
Absolutely. We love having you here, and it all sounds really amazing. On that note, just for the people at home who may not be as well versed in the finance field, what exactly do you do as a portfolio manager?
So a portfolio manager in our realm, we manage wealth. We're a wealth management firm, but what we do from an investment standpoint is to oversee, select securities, and help our clients not only create wealth, but preserve wealth. And here with our firm, Mandeville Private Client, we give our clients access to not only publicly traded securities, which everyone can access, but also private securities. And so my role as a portfolio manager is to ensure, based on my clients' income and assets, their different needs, what's important to them, their life stage, that I put a portfolio together that allows them to meet their goals and hit their priorities. And I do that, again, by building portfolios of both private and public securities. So a portfolio manager is, there are many, you probably heard the term over time. There are many in Canada that run mutual funds or different hedge funds or opportunities like that. But as a portfolio manager and an investment advisor, I'm fortunate to have the best of both worlds, where I can run money, help people invest, but as well do the planning side of things to ensure that to get to where they're going.
Sounds like very important work. And I mean, it can seem a little bit intimidating, I can imagine. I know that a lot of people kind of get scared at the thought of money. So how did you really get into this field, or what kind of grew into this passion for you?
Yeah, I was fortunate growing up in Halifax, knowing, I didn't really have to work very much just because I was very involved in sports. So I played a lot of sports. My parents, again, from Trinidad and Tobago, immigrated to Canada. So it's not that we were wealthy at all. We were, middle-class family, but my parents believed that, I want you to get an education. And I think that's the key to creating wealth over the long term, is to have that baseline of financial literacy, and 2, have fun and play sports. So I was fortunate to play sports at a high level. So because of that, I didn't have a job. But what it taught me, not having a job until I was in grade 12, actually, I sold vacuum cleaners for a little bit. Toughest job I've ever done. But what it did teach me is that sports, that is that discipline and repetitiveness is important, and patience, right? So nothing's built over a short period of time. It takes a lot of practice and a lot of time to do anything really well. So from a financial perspective, I've always loved money, and I've kind of studied some of the gurus of wealth, the Warren Buffetts of the world, and the Peter Lynch's of the world, and the Michael Lee Chins of the world. And I realized that real wealth is created over time. And I was fortunate to be able to follow my passion and go to Western, study economics, and then from that point, get involved in this industry. So it's been a progression, but it didn't happen overnight, that's for sure. But it just the foundation that I had from being disciplined in sports and then moving that discipline over to the finance arena, I think has helped me look a great deal.
And you talked about how important education is. Also the fact that you went to Western University. Me and Uttej are actually both considering going to Western. So
nice. Great
yeah,
school.
just for ourselves, would you mind telling us your experience, how it was, how you thought of school overall?
For sure, yeah. Western is a fantastic educational institution, both for obviously education, which is number one, but also for sports. Again, I was fortunate because I played at a high level of soccer. I was able to play for a year soccer at Western. Actually, that's not even fair. I made the Western team. I didn't play because I was a rookie. So all that to be said, I was able to, experience that for a year. And then being an athlete, I decided, you know what, I'm going to try it for the football team. So I actually played football for a year at Western as well. They're related. I never played football before, but again, it's more of the, setting a goal and having a passion for it, and had some friends who helped me get there. And that's why I played football until I was injured. So, but from an educational standpoint, West was a fantastic school. I had a great time there, both educationally, sports-wise. I was part of a fraternity, so I was very involved actually in the community of Western. And I think it's I believe, one of Canada's top educational institutions.
Yeah, we wholeheartedly agree. That's why we're looking into it as well. I have a lot of options, very stressful time for us. And actually, on that note, there's been a lot of struggles lately for really everybody. I mean, it kind of reminded me of a common aphorism that I hear that says, it's really about, you can't be successful without having a couple of losses along the way to help teach you. And on that note, we're just wondering, do you have any sort of substantial losses that you've incurred in your life that have helped push you forward or helped you grow?
Mm-hmm. So I would say the losses for me are not necessarily financial. Now, there have been some financial losses, and we can talk about that. But I think the loss for me, to be honest, is not having a foundation of financial literacy when I was young. Again, love my parents. They're fantastic people. They obviously, but back in that time, finances wasn't something you talked about. So my parents didn't, teach me how to save. They didn't teach me how to, really be financially responsible with money. And what that caused later in life, especially through university and after, was I incurred a fair bit of debt because I just thought, money, as they say, grew on trees, which obviously we all know that's not the case. So from I came out of the university with a bit of debt, which, I think in some cases is not a bad thing if it's for education, but in my case, it was more for discretionary spending and things that looking back, I realized, this was a loss because I started from a whole position as opposed to starting from a position of strength, right? So that would be in my mind, a loss for me. From a financial perspective, yes, I've lost money in the markets per se. There's been investments that I put money into where, I've lost a substantial amount, but it's never been an amount that would be detrimental to my overall picture. So usually when I invest for my clients or myself, I invest in a way that is a portion of your portfolio. So should you lose 1 or 2% of your overall portfolio, it's not going to necessarily hurt you over the big long term. But it's all relative, right? So I do remember one case where it was substantial at the time, but looking back, it was just a blip in the overall radar of things. So.
Yeah, personally, I can relate with your challenges with learning financial literacy at an early age. I think it's actually the same situation for a lot of youth today, but the difference is they have access to the internet. So it's actually pretty easy to access free resources that could teach you about it. And now it's just a matter of motivation, but that's still great to hear how that still shaped your career so far. And now pivoting into the next segment of the episode, we actually wanted to talk about diversity and inclusion in the finance industry. And to start that off, we wanted to get your personal opinion through your experience and perspective on whether or not the finance and wealth industry is inclusive.
Mm-hmm. I think it's getting there. I think it's there's still a long way to go, if I'm honest. So again, I've been fortunate. I have, hard work is important. I've done a lot of education. I've completed. I've been doing this role in the wealth management industry for 25 years. So it didn't come overnight. But obviously I've worked hard. I've had a lot of people supporting me over that time frame. But if I were to look around in a room of 100 people in my industry, there aren't many portfolio managers of color. I could probably, and not even, that's not even fair. There's probably in Ottawa, I don't know if there's any other, or maybe there's 1 or 2, but not many. And in Canada, the same idea. And you know, so usually when I go to events, which I go to a lot, I am one of the very, very few. That being said, one of my mentors, one of the individuals that I work with here at Mandeville, who actually is the chairman and CEO of this firm, Michael Lee Chin, is one of the most successful Canadians, as you can imagine, and he started from humble beginnings. So it's not that it's impossible, obviously, but yeah, there is that you know, challenge of being one of the only people in the room of color.
Right. And I expected that answer. Like just from statistics alone, the percentage of like finance professionals that are minorities is very low. So, and I'm sure you've seen that as you stated, like from experience. So from your like perspective, what kind of diversity and inclusion strategies would you wish to see introduced to maybe bridge this gap?
Well, I think it goes back to, as we talked about earlier, education. I believe that financial literacy is not something that's taught in schools. It's not something, as far as I know, and I could be wrong on that, but from my understanding, it wasn't taught to me in schools. So if you don't learn it, yes, there's a resource of the internet, as you mentioned, but not everyone has the guidance or has the aptitude to be able to research on the internet, or even has the acumen or drive to. So I think if in schools there were a course of, okay, this is a financial literacy course, or these are some of the basics. I'm fortunate to be able to be in the position I am, that I can teach and I can, you know, I want to give back. So I do a lot of seminars, I do a lot of things like this where I can, you know, educate, introduce books, introduce podcasts, introduce things like that to the younger generation. I'm fortunate I have 3 boys, and they've all learned from a very young age, you know, just the adage of, you know, saving even 10%. I know that doesn't seem like a lot, but even 10% of everything you make, you save that away, and you know, you spend the rest, you'll still be fine. But just starting with that mindset of having that saving mentality, but unfortunately, not a lot of people have even that basic knowledge. So education is important. It doesn't matter where you are in life, education is important. But I think in this forum, it's so important because finances, as you know, are critical to our long-term success, anyone's long-term success.
Yeah, enthusiasts like Uttej and myself, we both also pretty much learned everything from the internet. I mean, it was difficult, but we had the motivation to do it, so we put countless of hours into it. And I totally agree that if there's somebody higher up, someone like you, who's kind of guiding students or the younger generation, showing them the way, it just makes it that much easier. And on that note, we know that you're personally involved with the Black North Initiative. And we were just wondering if you could talk a little bit about what they do and kind of what does that organization mean to you?
Mm-hmm. Yeah, so as you can imagine, the incident of George Floyd in 2020 was the catalyst of the Black North Initiative. I think that was a moment in time that many of us will never forget. And obviously it's spawned what the Black North Initiative is. For me, this organization is an opportunity to have peers, to opportunity to have individuals have a voice, not only in their own institutions, but in a greater global community. Obviously started in Canada, but I think it's an opportunity that allows people to have peers, a place to be safe, a place where people can have discussions, open discussions about what they're dealing with, either in their workplaces, at home, in the community. And you know, the initiative, you know, again, has given people a voice. So for me, I'm proud to be part of it. I'm proud to be someone who can hopefully contribute at a larger level down the road. But I think right now there's still a lot of work to be done, and I think the Black North Initiative is a great opportunity for us to do that or work through that. So.
Yeah, definitely. And if you'd be comfortable answering, we just wanted to know a little bit about kind of if you face any challenges personally that got you involved to join this initiative.
Mm-hmm. Well, you know, I think the challenge of being, as I said, the only person in the room of color, the challenge of I've had many incidents from my youth till now where there's been discrimination, there's been not inclusion, but I look at that as a little bit of ignorance in some cases, but more importantly, motivation for me anyway. It's allowed me to understand the difference between, again, I speak for me only. I'm not saying anyone else, but in my case, it motivated me to continue to do better, to continue to attach myself to peers who had my best interest in heart and who wanted to see me succeed and not at the expense of me not succeeding. So wanted to be there, walking side by side with me. And I think for me, even now, I look at opportunities where I can help, whether it's the younger generation, whether it's, I'd rather see people bring people up with me than be up here on my own or be anywhere on my own. Because I think that's really what we're all here about, right? To give the opportunities that we've been blessed with to others. So yes, I've had challenges. It's been a motivation for me. It's allowed me to, maybe stronger and to be the person I am.
Yeah, I mean, that's a really commendable thing. Something to be proud of, obviously. I can tell you from the student perspective, every time we have a guest speaker walk in to talk about their profession, or anyone that's just willing to share information, it's really eye-opening for us, because as students, we don't get many chances to see inside of the industry. So when an actual professional comes, tells us how it is, it's a great experience for us, and I could tell you that we really appreciate it.
Ken, I'm happy to be here. I enjoy this. I'm happy to share the little bit of knowledge I have. So.
Yeah, and adding on, you talked heavily about sharing the knowledge with those to bring them up with you. And that actually pivots perfectly into the next segment, which we actually want to talk about working with youth, specifically in the finance industry. And to start that off, do you actually work with a lot of youth in your industry?
Yeah, so I do, because, well, obviously I've been doing this for 25 years, but as I age, I'm 50 now. The clients that I had when 25 years ago, they're having children and grandchildren, etc. So yeah, I've been fortunate to be able to nurture those relationships over time. And, it seems like I'm getting a lot more calls from the younger generation, from, 14, 15, 16-year-olds. And I'm very open because, even at your age, obviously a little bit older, but I'm very open because I got a call. I got, I think, 2 calls last week from individuals who were 16, 17 years old and say, I want to get an idea. I know I can't invest yet because I'm not 18, but how do I start? Where do I start? Do you have resources? And I'm happy to take those calls. I mean, that's, those are the calls I enjoy during my day. As I mentioned, my boys, I've tried to instill that in them. Both my wife and I have instilled that, what, as long as you keep saving, doesn't matter what it is, 10% is our baseline. But, when you don't have a lot of expenses, if you can save a bit more, great. But saving is a thing, unfortunately, for most Canadians, they're not really great savers. I think COVID actually, despite what it's done to a lot of people, and it's from a financial perspective, and obviously the restaurant industry and the tourism industry and all these different industries have had a really hard time, but it has allowed the people who haven't been affected as much to save more. But yet still our savings rates are very low compared to a lot of countries in the world. So I encourage the youth like yourself, again, 10% for me is a baseline. If you can save 10%, you make $1, you save 10 cents, spend the rest if you want. But that's where I think if you start with that mindset, saving first and then spending, you'll really see that that's how wealth is created over time. And as your income grows, your savings rates will grow as well. So, I don't know if that answers your question, but yeah, I've been trying to instill these foundational truths in my mind to my family, my children to start, and then to those who call me. So I've been getting lots of calls from my eldest son's peers and my middle son's peers, and asking questions about how to save, when to save, how to do it, and how to start that wealth creation process. So.
Yeah, I think the youth is getting smarter in trying to utilize their resources. Whatever they have available to them, they're going to make the best use of it that they can to try and excel themselves. You talked a little bit about how you want to instill that financial literacy in your own children, and that you've been doing it, which is something that us personally, we were still at the point where I personally come from an immigrant family, and my parents didn't really want me focusing on money. They were always like, okay, go study, everything will sort itself out. But as I grew, I kind of realized that financial literacy is still really, really important. And as smart as you can be, or as smart as you will be, you can always have financial struggles down the road. And that's why it's really important to learn those things. And on that note, I was just wondering, like, when do you think that the youth should get involved with money management or finances or anything along that sense?
As soon as possible. I think the earlier you start to learn the value of money, and the earlier you start to understand, again, it's not about being a portfolio manager. It's not about, being a financial advisor. It's just about simple financial truths, which I think are foundational. Getting that education early. Again, my eldest boy, I think he was the one who did the most, started his job career early. I think he was reffing hockey or reffing soccer. And so even from, I think, the age of 11 or 12, when he was reffing these things, I would say, just take 10% and put it away. Let's just save that. And then you can spend the rest. Usually back then, they're not spending, you're spending on candy and things like that. But, I think the earlier the better. And you understand, obviously, the power of compounding, right? And even if it's just starting to save in your bank account, and then when you can get to the age where you can start investing in securities that make sense for you, then that compounding is so important. And looking back, I said, I'm 50 now. It's just amazing to think of what a difference if I started to save at age 20 as opposed to saving after, when I was, started to really create some income that could allow me to do so. But the earlier the better, my friend. And if people can just start that process, it's so important.
Yeah. And we just want to kind of jump into a little bit more of maybe some fun questions, just kind of generally how the market's doing, maybe some crypto knowledge, just to get your insight on it a little bit.
Sure.
So first off, we just want to ask, what are your thoughts on crypto? It's obviously a really, really new space that a lot of people are still a little bit wary about. So just general thoughts, anything you're willing to share.
Well, it's new. I guess everything's relative, right? So it's a new space, but it's been around for a little while now. From a individual, I'm a big believer personally in eating my own cooking. So I have clients and myself who've looked at this space for, 6-7 years. And I dabbled personally just to make sure, because before I do anything and tell my clients to invest in anything, I want to make sure that I'm doing it myself. So it's not just saying you do it and I don't. No, I'm going to do it first. Makes sense. Then I'm going to introduce it to them. But the challenge with cryptocurrency or the blockchain or that space, as you mentioned, it's not an easy space to understand. Do I believe it's a space that's going to be with us for a long time? Yeah, I do. But as far as an investment side of that space, it's one that is definitely more speculative, and it's not something for everyone. So for my clients, I have access to opportunities in that crypto space, and I have some clients that, if it makes sense for them, I have introduced it to them. But again, in a way that is, maybe it's 1% or 2% of their portfolio, based on their comfort level, based on their ages and their understanding of the space. Again, and then from there, we'll see how that works out. But I'm not going to take large bets in a space that I believe is a speculative space because of how relatively new it is. So.
Right, and you touched on how you would allocate only a small amount for your clients. And we want to contrast this with actually younger investors who generally seem a lot more attracted to crypto. They'd be willing to allocate a lot more. And I know people just a little bit older than me that allocate 10, 20, 30%, maybe even more, because they're so attracted to those returns. But also another reason seems to be that when they lose confidence in the dollar, they feel like crypto is an alternative. And following on that, do you think something like Bitcoin, a new store of value, can become a new hedge against inflation, as gold currently is?
To be honest, I think it's too early to tell. I've heard the comparisons between Bitcoin and gold as a store of value. I think we're still in early stages in this technology and in this space. So, yeah, I'm not comfortable saying it's a store of value. yeah, and the volatility of the space itself, as you know, Bitcoin prices and Ethereum and all these different coins can fluctuate vastly. And I think it has attracted a lot of youth investors, but because I've been around a long time, I've seen the dot-com bubble back in the early 2000s, and I've seen obviously 2008 challenges, and I've seen many years before that. The challenge with investing without having that long-term perspective, until you have a substantial potential loss just in market value, you don't really understand the emotions surrounding it. So I think most young individuals who've invested in the last several years in crypto and any of these companies, whether it's been the Facebooks or the Metas of the world or the Netflix of the world, they haven't really experienced any significant downside. So that concerns me, because once you feel a hard drop in the markets or hard drop in an investment, it may scare people out of the markets. And then it's tough to create wealth over the long term, because you jump in and out, and really wealth is created when you buy great companies, buy great investments, and hold them for the long term, right? So.
Yeah, actually, it's funny that you mentioned Netflix and Meta. I don't know if you recently saw both of their earnings. They were down like 25% after they came out. So it was a bit of a shock in the market. And I mean, there's been a lot of volatility in the market overall. We also saw companies like Amazon, Google, they were both up, I think about like 10% after earnings. And these are all multi-billion-dollar companies that are still facing this kind of volatility. What do you think is causing this immense volatility, even when you go into the higher market cap companies?
Yeah. People don't like uncertainty when it comes to anything in life, but more importantly, when it comes to investing. So there's a lot of talk in the world, and you're hearing about it, whether it's inflation concerns, whether it's tensions in Russia and Ukraine, whether it's, potential overvalue of stocks, whether it's, the COVID crisis. So all these things create uncertainty. And when there's uncertainty, individuals, whether it's you or I, or people that, whether they're investing or not, they don't have the comfort level of, the long-term view anymore. Now it's more of a short-term thinking. So that's a challenge, and uncertainty, especially in the stock markets, is not a great thing. So you'll see the volatility because people are concerned about these different issues. Maybe they're not even affected or not even related, to the markets, but they can affect the psyche of investors, and that causes volatility in the market. So for me as a long-term investor, for me and my clients, hopefully for long-term investors, they entrust me to make these decisions, whether to allocate more to certain spaces, to take some money off the table when we've made a lot over the last, several years. That's my role. But yeah, the volatility is real, and I think it's going to be with us for a while as things start to, especially as prices start to increase, and interest rates potentially will be increasing as well. So that's going to create more concerns, because as rates rise, things get more expensive, right? So.
Yeah, I mean, I obviously don't have as much experience, but from what I've seen, it seems like a lot of the newer investors are coming in, and they're focused more on news than actual fundamentals of the company, which I'm assuming, 10 plus years ago, that's really what made or break buying or selling a stock. It was the fundamentals, the company's valuation, and how it was doing. Now you'll see things like GameStop or AMC, where people are rallying, people are focusing on the news. I mean, whatever the Federal Reserve says about interest rates, that can change the market, and it can make it extremely volatile. So it seems to me, at least, like maybe companies aren't really trading on valuations as much as they were before, and they're trading more on news fluctuations and overall opinion or overall market sentiment.
You're right. And no, those are great points. I'm still a big believer in fundamentals. You would not, I don't think anyone on this call would buy something if you knew it was overvalued. So if you knew the house next door to you was worth $500,000, and your neighbor came to you and said, you know what, will you buy my house for $1 million, knowing that it's worth 500? You wouldn't do that, right? It just doesn't make any sense. Same thing with stock prices. I mean, the value of something, price is what you pay, but value is what you get. And I'm still a big believer of valuations. Yeah, some of the stocks, the valuations can be elevated when you talk about, Amazon or the Alphabets of the world, or the Facebooks of the world, the Metas of the world. They can be elevated because of the space they're in, but at the end of the day, there still has to have value related to these companies. So I'm a big believer of not overpaying for anything, whether it's cars or homes or food or clothes. And the same thing for stocks. So if it's overvalued in my mind, I don't care how great the company is, I'm not going to overpay for it. I'd rather buy something that has value, whether it's a bank stock or an Enbridge or a TransCanada pipeline, whatever it is, and wait for some of these companies that I think are overvalued to pull back, which you mentioned earlier has happened, right? So you look at some of these companies have dropped 50%, whether it's Shopify or Lightspeed or Meta. So maybe they're better valuations now. Not saying that they are, but maybe they are. So that's the way we start looking at them again.
Yeah, adding on to that, actually, I noticed some of these big companies, though it does seem like a big shock, you're seeing a lot of value just like almost like a haircut just coming off that company. It's actually not trading in line with historical multiples. So maybe the rallies we've seen in the last 2 years has been conditioning investors, especially the new investors, to a different, I guess, expectation of what you should be seeing in the market over time. But personally, Duane, I want to thank you so much for coming onto the podcast. Your contributions have been amazing. You revealed what it's like to be a portfolio manager, how you're working to increase diversity in the finance industry, and even how you talk with youth and teach them about financial literacy, sharing what you know. So on that note, do you want to give us a last bit of advice, maybe to those eager high school and university students out there who are seeking a career in finance, what they can do to be prepared?
Mm-hmm. Yeah, from my perspective, it's important to, don't reinvent the wheel. So find someone. I mean, again, I'm only one person. Hopefully, I've been helpful in this podcast. But find someone who's doing what you want to do, and if there's someone who's credible and someone you think that could be a mentor to you, try to hitch your star to that person. That's what I've done over time. I've been fortunate to have several mentors in my career over time who've helped me and guided me to, again, obviously I do it through my filter and my lens, but I think it's important to have someone, because no man or woman is an island. And I think, again, we talked about earlier, bringing someone up with you or walking beside someone to help them get to where they're going. And I've had a lot of help to get where I'm going as well. So, if you can find someone that, again, who's doing what you want to do, try to hitch your start to that and then start from there. And then again, start saving early. I think that's just something that is fundamental to try to create wealth over the long term.
Yeah, thank you for that piece of feedback. I mean, I guess Uttej and I are kind of down that path. We're both same school, we're both same interests, same age. So we're kind of helping each other along the way. So it's really nice to hear you kind of reinforce that mindset that we already have. And on behalf of Youth Culture, thank you again, Duane, for being with us today. Your feedback was really, really insightful, and we hope that a lot of people will take your advice to heart. For everyone else,
pleasure. Yeah.
For everyone else, be sure to check out more finance content and interviews at youthculture.com, as well as our new app, The Hub. Thank you for listening. Until next time. Bye, everyone.